day all. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Tuesday, November 19th, 2019, just after 4:40 p.m. Central Time. Well, as you can see in the grains, a little bit of a bounce in the markets today. The question, of course, in grains is a combination of harvest, China-U.S. trade talks. As for the harvest, there was still plenty of corn out into the field. And, you know, we're talking Minnesota, parts of Iowa. I've been reading about it as to how much the government said at yesterday's report was still out there. And I'm guessing 2.5, 3 million acres of corn still have to be brought in. Then the other problem is farmers seem to not want to pay the price to dry the grain out this year because prices are low. Will they? What are they going to do? They've got a bit of a dilemma there because do they go get the crop or not? In terms of looking at the marketplace, a bounce. That's okay. You can see energy prices were down hard today, and that's because there's all this doubt about the U.S.-Chinese trade talk, but I think the grain market, it's sort of getting beyond it right now. It's more involved in the harvest pressure. I today, by the way, did my first grain report for you, a video report, and I'll talk about it right at the end of this, and it's on the corn market. In the soybean market, as you can see, the weekly area of closes, the market's in a correction phase. It's harvest time, that's to be expected. Support all the way back at 891 and a quarter. It doesn't mean you have to go to the support, but that's where that 18-week moving average of closes is. Even with the breakdown, the bias in this market is still to the upside. And that's on a close basis. When you come to a daily bar chart, I think it's different. You can see that when you come to the daily chart, there's no bias to the upside that I'm seeing at this point. And when I look at the swing line, I see I'm not even in a trend. Over the past week, you've made a higher high, you've got a lower low. You're in the middle of no man's land right here. When you take a look at moving averages, the market is fighting to stay above the 100-day moving average. The resistance, if it rallies, seems to be the 200-day in the gray. And if it could clear 923, well then wherever that 18-day average comes in, and my guess is it's going to be right around that high tomorrow, which is when we open after 7 tonight, it'll be in that general area. What about Bollinger Bands? It's the combination of the green line, the 100-day average, and the Bollinger Band that's offered the support. The market re-enters another leg to the downside if Monday's low, and that low was 910, is taken out, because you could then end up with lower highs and lower lows again, straightening out this sideways pattern. Got to wait and see if it does it. And of course, where's the market trying to hold? Right into that 100-day average. As we take a look at momentum, I'm plain out bearish. To me, in my hierarchy of indicators, the slow stochastic, when it embeds, is the key. And it's embedded. So this just becomes noise. This tells me until the red line's over 20 that the rallies, not the breaks, the rallies in the market are being used by the pros to continue to sell short. And then their question is, can they get down into the support zones off the rally? So you were embedded over here. I think they were selling. Then against a 100-day average, the first support they're covering. I think they'll consider selling on rallies again. In the meal market, this market's got a pattern of, if we look at it, an outside day down. This low right here came in at 303.10. This low was 303.80. So I suddenly have a lower low, a higher high. I don't have a trend. That's the thing I'm pointing out. The market's under both averages. Momentum is drifting, but it's sort of putting itself down. If this market can let go under Monday's low, then the target becomes 301.80. On the way up, well, I don't know. So far, the 100 and the 18-day average, why they get hit, they don't seem to stop the market. It just punches through either way to Bollinger Band bottoms or tops. So I'd say we're in a fairly wild space right here. In Jan soy oil, and remember, I've changed now from Dece to Jan in these two. And it got a different pattern, lower highs, lower lows. So you've gone through a correction phase, just missed hitting the lower Bollinger Band, got oversold, and momentum is trying to flip itself. If it can flip itself up, you got to watch. It didn't do it today. You finished at 31.16 and the 18-day average is 31.29. So the battle zone is right here at that 18-day average. To go short there, you'd have to risk almost 100 points over 32.10 over the last high. I didn't say you have to, meaning you have to, but that's what I think the pros would do. I don't know that that's their appetite. That's a fairly large risk. In the corn, while you bounce today, I say this rules the day. Until you lose the embedded reading, I think the pros are using these bounces to go short. Now in my corn report, I'm going to show you where harvest lows have come in, what you pay attention to, even though this is still bearish. So stay tuned because I'll show you how to get to that report in a moment. But I still view this market as bearish. In the wheat market, you can see how the market's come down. Now one of the things to remember in wheat, you've got a lot less acres planted this year because prices haven't been strong. And you've got massive competition in world wheat markets. So I know that I saw today some traders saying, they're going to start playing for winter kill and things can happen. It's not my cup of tea. I'm looking for resistance right here at the 18-day average. You have a small divergence. You've got momentum pointing up coming out of an oversold condition into a stall. If the market gets over the 522.25 zone, you knock out the downtrend. You're at 515.25, so I think the bears right here against the 18-day average are making their stand. I think if they get over that number, they throw in the towel and they'll say, okay, let's see what we do next time. In the sugar market, sugar's trying to hold this 100-day average. In fact, it's been an important number, as you can see. It's really not been as important. It's really more important, rather, than what the 18 has done. Now, here would be the negative, because the market's still in an uptrend. It's in a correction phase, but an uptrend. Momentum is turning down. That's one negative. If you take out 1260, you could end up with lower highs, a lower low, and if you closed under 1257, I think the market would turn bearish at that moment. If it turns bearish and had legs to it, which I can't tell you if it will or won't, wherever this Bollinger Band comes in could be the support. And it's moving at about 4 points a day, 5 points a day. So just something to keep in the back of your mind. Even if you get under that, probably that 1230 area, you got to watch for support. Coffee market. When you lost the embedded reading, right here, it meant to me, price and the closest moving average are going to make a run at each other. Market was correcting, still correcting. Today, it's all I needed. I don't care what else it does. So now I've got a market back in a downtrend, lower highs, lower lows, resistance 108.05, let's call it. Support the 100-day average. If you can slice through that, does the market have the wherewithal to get back down to the lower Bollinger Band? You'd have to go all the way over 112 to negate the downtrend, and that would not start an uptrend on the current pattern. In the cocoa market, you're trying to develop a bullish embedded reading. So traders will say, nah, it can't hold there. Oh yeah? You develop that embedded reading, and then it turns into something until it's lost. I think the pros start buying this market on these pullbacks. Now, how many days do we have of where the numbers are over 80 together? You have today, you had yesterday, you had the day before. It's got to hold now. You've got it already. So now any pullbacks, as long as that red line doesn't fall back under 80 and stay there, I think that the pros are trying to take control of the market again, and they'll look to see, the target seems to be the upper Bollinger Band again. In the cotton market, I see a market caught in sideways action. See these black lines, the Bollinger Bands, developing, it's like spinning within it. And as that happens, you're building pressure. It's like a spring inside of a pipe. You're just grinding away. Which way is going to be the big question there? What number does it keep hitting? You tell me. Look at this red line. This is a market that's caught going nowhere. It's trendless right now, looking to see what's next here. In the cattle market, you came down for a successful test of the zone of the 18-day average. Market still fighting at that. You don't have a trend here. You've got the higher high and a lower low in play. And you have momentum where you're still embedded. Until this is lost, the bulls can surprise you to the upside, so you got to be careful. Now, this market, what I didn't like, you had an outside day up on Monday. When you take out the low of an outside day up, my work that I teach says the odds are strong. Price and the closest moving average are going to make a run. The 100's down here, so that's the 18. They're making the run. Is it close enough? We'll find out tomorrow. Feeder cattle's bearish now. You've got a pattern of lower highs. You certainly have the lower lows. You have momentum pointing down, bias down. So I think the bears are making a stand against the 18-day average. I think they're wrong if prices get over 145.70, and if they can start pushing through today's lows, well, the target could be the lower Bollinger Band. Last, in the hog market, does this look to you at all like China's buying U.S. pork? If it does, you're seeing something I don't. The market is not done a very good job. It hit the lower Bollinger Band on Friday, and now day one under it, day two. And admittedly, that means you're getting ahead of yourself because you'll stay within the bands 95% of the time. But because you were coming out of somewhat sideways action, I just don't see anything pretty here. I see two levels of resistance, back up at 73 to 74, and I see a goal to get over the lower Bollinger Band, but I don't see anything bullish. On the other hand, the pattern is one where you got a higher high and lower low. It always makes it difficult. As I said to you, I did a special report on corn today, and I cover in it, the charts are going to look very much like that, and I cover in it for you the weekly, the daily, price counts, seasonal charts. I go back 30 years, 15, 5 years on them. I put everything I can together for you to give you some ideas on this corn market, especially at this time of the year as we come into that verb that we call the harvest lows, right? Or noun, I guess you might say. That's a better word for it, a noun. The harvest low. And as we get there, the question is, what do I think? Well, if you go to our website, it's all a video report. And you go to www.iraepstein.com, take a look at the word research. You'll see it right on the website. You'll see Ira Special Reports, Grains. Click on it. Away you go. Same thing here. If you want to get there quicker, if you're watching me on YouTube, do that. If you have any trouble, call my staff tomorrow. They'll work with you and help you get through. I'm Ira Epstein. You have a great day. I'll see you in the morning.